Hi, welcome to today's video. Today's video will be on the income statement preparation and for the statement of owner's equity. Both of these statements to prepare, we need a title, we need the name of the company, so a company, a title, income statement, and the period of time covered. So for the month ended June 30th. By titling these, we know whose business it is and what particular statement it is and what period of time or date it covers. We also tend to group things in groups. And we will also, so we're going to group revenues and expenses, for example, in the income statement. These little red lines down here will not appear on the statement. They're just there to show you where the columns are roughly. This would always be a subtotal column. This would be a total. So subtotals are always to the left. Total columns are always to the right. So first thing I want to prepare on the income statement is the revenues. I will start with the largest one first, and that's sales in this case with a dollar sign. The first item in any column needs to have a dollar sign. Any items below that do not technically, but could have dollar signs. Sales is first, service income is second. We draw a line here. That indicates the end of the column for subtotal, and I'm going to put things over into the total column now. In this case, total revenue. And that's $1,800, first item in a column, so it needs a dollar sign. Expenses. Now, the first expense, rent expense, then, is the first item in a new column because of the line up here. So it needs a dollar sign. Again, all the items can have dollar signs on them. That is your option. So what is the order on expenses? It really doesn't matter. It could be biggest to smallest, alphabetical, by account number. There are a lot of different ways of doing it. I chose biggest to smallest in this presentation. So we got rent expense, $600, utility expense, $400. Miscellaneous expense will always go last. And the reason it goes last is it covers whatever is not above it. So in this case, miscellaneous expense means every expense other than rent or utilities. And so that's what goes in the miscellaneous expense account. We add those three together. Here's a line telling you that we're going to add a bunch of numbers, and we're going to put them in total expenses $1,200. Second item in a column does not need a dollar sign, but again, you can put one. Net income, could be net loss, is a difference between the revenue and expenses. So we draw a line here to indicate that we're going to do some math. 1,800 less 1,200 is 600, so it's first time in a column needs a dollar sign. And then two lines below the 600 to indicate that we're done with the statement. Now please note that the income statement had to be produced before the statement of owner's equity because this 600 has to come up to the statement of owner's equity as net income. So again, what do we do when we produce a statement? We name the company, the name of the statement, in this case statement of owner's equity, and the period of time that the statement covers for the month ended June 30th. Okay, so the first item in owner's equity is the name of the individual, comma capital. So I just took J. Doe. We date it, so we usually say for June 1st, 2014. Didn't really have room, so I just put 6/1/2014 there for your convenience. First item in the total column, so put a dollar sign there, $2,000. What does that $2,000 mean? It means that the business, A company, has been in operation for a while. If it had been zero, that might have been the first month of operation, but with a dollar amount there, it has been an ongoing business for a period of time. Again, this is total column, this is subtotal. Again, subtotals always go to the left, totals are always on the right. So now we take this net income, add it, less the withdrawals, and so we're going to take a difference here, draw a line, increase in capital, and bring it out. That, in this case, was 600 minus 400 is $200. Again, dollar sign here was needed, first item in a column. Nothing needed here, but you could put it there. Again, nothing needed here, although you could put a dollar sign. Now we're going to take either and add these, because it's an increase, or deduct these if it had been a decrease. So if the income was 600 and the withdrawals were, say, 1,000, then it would have been a decrease. So JDO, comma capital, again, you date it June 30th, 2014, 2,200, first item below line, so it needs a dollar sign, and 2 lines to indicate the end of the statement. Now this amount, JDO capital, will go farther on. It will go onto the balance sheet under owner's capital. And so, again, we had to produce the income statement first, because the net income or loss went up to the statement of owner's equity, which was produced second. The ending balance in owner's equity will go onto the balance sheet, which will be another presentation. So key things to remember: name of the company, name of the statement, the period of time. We need to group things on the income statement for appearance purposes. So revenue, expenses, the difference is our income or loss. Same thing for the statement of owner's equity. Name of the company, name of the statement, the period of time covered. We always start off with the beginning capital, add the income or deduct the loss, deduct the withdrawals, which is money that the owner has taken out of the business for personal use. And then the increase or decrease in capital goes over here, and then JDO capital at the end is here, and then that goes on over to the balance sheet. So look forward to seeing you on the next video. Please be sure to ask me any questions as you have them. Take care.